This video is part of the 2020 GRESB Assessment Training Program. It will cover the changes to the GRESB Asset Assessment in 2020 relative to 2019. Note that this lesson is aimed at participants who have participated in 2019 and are looking to understand what has changed. For introductory training on the GRESB Asset Assessment, you should follow the lessons on structure, management component, and performance component. We'll start with an overview of the new structure of the asset assessment now being split into two components. We'll then go into more detail by taking a look at the assessment-wide changes. After that, we'll look at entity and reporting characteristics, including changes to the GRESB materiality assessment, followed by the developments in the management and performance components. This will include the use of reporting boundaries and external data review. Along the way, we'll explain the validation and scoring changes and how they affect the 2020 assessment. We'll also include a short explanation of the new participation fee structure. Finally, we'll conclude this lesson by explaining how the new assessment structure impacts the output and results of 2020. By the end of this lesson, you should understand the main changes to the asset assessment and be able to complete the infrastructure asset assessment in 2020, assuming that you participated in 2019. First, let's go through the structural changes. In 2020, the GRESB infrastructure asset assessment is divided into two components, management and performance. The management component measures the entity's strategy and leadership management, policies and processes, risk management, and stakeholder engagement approaches, comprised of information collected at the entity level. The performance component measures the entity's performance, comprising information collected at the asset level. It is suitable for any infrastructure company with operational assets. Each component makes up 50% of the overall asset assessment. That means that if an asset completes both components, the scores for both are added up to give the asset its GRESB score infrastructure asset. Now let's review the changes that apply throughout the assessment. All indicators have been given titles to make them easier to reference. All indicators have been formulated to clearly apply to the entity level. Yes sections were previously scored and received 10% of the points for an indicator. This is no longer the case in 2020. Next, let's look at changes to entity and reporting characteristics. Most of the changes in 2020 are structural. GRESB intends to work with the industry to give more focus to performance measurement and scoring over the next few years. To cater to this, as well as make sure that reporting uses accurate boundaries, the scope of reporting will need to become more standardized across entities. This will ensure that apples-to-apples comparisons can be made. We have therefore added a new indicator, ancillary activities, and a new sub-question to the indicator on sector and geography. This gives a better and more structured understanding of reporting boundaries that apply to the entity's data. In addition to these changes, the indicator on industry associations was removed. Finally, the indicators on nature of entity's business and the GRESB materiality assessment have been moved to reporting characteristics. We'll take a look at some of these changes in more detail. The entity can report details about each of its facilities under sector and geography. New functionalities have been added. The latitude and longitude will be provided automatically upon entering an address. Additionally, entities can indicate the life cycle stage of the facility, that is to say, whether it is in development or is operational, and they can indicate whether facilities are included in the reporting boundaries. An indicator on the reporting of ancillary activities has been added to support the disclosure of reporting boundaries. Entities can indicate whether there are any activities they engage in outside their main sector activity, and whether these have been included in their reporting boundaries. We will review the application of these boundaries to the reported data later in this lesson. As materiality is a key dimension of the GRESB asset assessment, we will look at the changes to this indicator in more detail. Materiality-based reporting and scoring means that only the issues that are material to the entity need be addressed. It is therefore important that reporting characteristics are completed prior to starting the asset assessment. First, new sectors have been added. These are fiber networks, smart meters, electric vehicle charging, and landlord ports. New ESG issues have also been added. These are hazardous substances, local employment, board ESG oversight, conflicts of interest, delegating authority, and shareholder rights. As discussed, only issues that are material to an entity need be addressed, and entities will be scored based on their ability to report on those issues. New questions have been added to the GRESB materiality assessment to further refine the materiality approach in 2020. In the materiality assessment, the entity must respond to a list of questions. Based on the responses, the region and sector of the entity, ESG issues are assigned materiality weightings. For all the issues that are flagged as medium or high relevance in the materiality assessment, entities will be scored on the responses for the relevant indicators. Any issues flagged as no or low relevance will not be scored, although entities are still able to report on those topics if they so choose. Now let's take a look at the changes to the management component. Most of the changes in the management component are structural. First off, there are new answer options that allow better alignment with the other GRESB assessments, such as the real estate management component and the infrastructure fund assessment, as well as with external frameworks like PRI and GRI. All indicators have been restructured into 5 aspects, the same as in the real estate and infrastructure fund management components. Some indicators have been moved or reorganized. We have undertaken extensive work to review alignment with external and internal frameworks. Based on this work, we have made adjustments so that the management component for infrastructure asset is aligned with the infrastructure fund and real estate management components, helping participants that are working on multiple submissions to stay organized and to facilitate referencing. External alignment has focused on using similar nomenclature and concepts to aid participants reporting to multiple sustainability frameworks. References to these external frameworks are provided for each of the indicators. The new aspects in the management components are leadership, policies, reporting, risk management, and stakeholder engagement. We'll run through the changes for the indicators in each aspect, highlighting only the most significant year-on-year developments. The first aspect is leadership, where there has been a restructuring of the indicator ESG leadership commitments. In the new structure, commitments have been split up to distinguish those that are general from those that are issue-specific, and to distinguish commitments that require organizations to take action from commitments that do not. Next comes the aspect policies. These cover any policies that relate to environmental, social, or governance issues. No major changes have been made to these indicators. The third aspect is reporting. 2 indicators on ESG disclosure and third-party review have been merged to create the new indicator, ESG reporting. There are no other major changes. Risk management is the 4th aspect. In this new aspect, indicators have been reorganized to combine management systems, monitoring, and risk assessments. The final aspect is stakeholder engagement. The indicator, Actions to Implement Stakeholder Engagement Program, was removed, as this topic is now covered under implementation in the performance component.